I know most of you are probably wondering when the commodities bull market will begin, and a lot of people have been asking about gold as well. This is a topic many of you would like cleared up, and that's exactly what we'll be diving into today. But first, for those of you who are new to our channel, we'd highly recommend that you hit that subscribe button and turn on the notification bell so you don't miss out on any of our future videos. Now, with that being said, let's get back to today's discussion. When it comes to commodities, Rick Rule believes that the bull market actually started a couple of years ago. In fact, he believes it began around 2 years ago for most commodities, and around 4 years ago specifically for gold. If you look back, just 2 years ago, oil was priced at $100 per barrel, and copper was priced at just $1 per pound. So when people ask me when the bull market will begin, I have to tell them that we've already been in it for quite a while. What's really important now is to understand where we stand and where we're headed. Rick emphasized that we've been in a bit of a hiatus over the past few years, and he suggests that people need to ask themselves a few key questions about commodity trading. Rick ranks these questions in order of importance. First, are we going to experience a synchronized global recession that significantly impacts commodity equities? If a global recession takes hold, it could dampen demand for commodities and ultimately affect the profits of commodity-related companies. Second, will increases in interest rates crush commodities-related companies due to their capital-intensive nature. Higher interest rates would boost the cost of capital, which could have a detrimental impact on the profitability of these companies, potentially leading to a negative delta for commodity stocks. And third, Rick asked, do you think the crisis in Ukraine will finish swiftly and peacefully? If not, how do you think that would affect commodity supplies? We've seen how geopolitical events, like the Ukraine conflict, have already had a dramatic impact on commodity prices. Rick believes that these three questions should be at the forefront of every investor's mind. He explained that early on in his career, he was taught that you don't know enough about an investment thesis unless you can identify at least 3 things that could go wrong with it. He believes these 3 questions are crucial for anyone considering investments in commodities today. Moving on, Rick believes there are 2 major reasons why people should consider investing in commodity stocks at the moment. The first reason is that society has been underinvesting in productive capacity surrounding commodities for a long time. For years, Rick points out, society has failed to invest enough in the production capacity for key resources like oil, copper, uranium, and nickel. He highlights the fact that some of the world's largest oil reserves, like those in the Ghawar field in Saudi Arabia and the Cantarell field in Mexico, are past their prime. We're not investing enough in exploration, project management, or sustaining capital to maintain current production, let alone increase it. This long-standing underinvestment will lead to a situation where the supply of these essential resources could eventually become scarce, which makes them more valuable over time. Rick also points to governments around the world, which he argues are increasingly becoming anti-resource. Many governments are restricting new investment, exploration, and development of resources. This creates a paradox. On one hand, these restrictions make it harder to find and develop new reserves. But on the other hand, these restrictions make the existing reserves even more valuable, as fewer competitors are allowed to enter the market. This underinvestment and restriction of resources could create an environment where the existing reserves become more important and valuable, ultimately benefiting investors who have exposure to these resources. The second reason Rick believes commodity stocks are worth considering right now is that natural resource reserves are becoming more affordable. In Rick's words, inexpensive is my favorite investment characteristic. There are many companies in the natural resource industry that are selling at substantial discounts to the discounted net present value of their reserves. These companies offer little upside in terms of new project development or research, but they are selling for relatively low prices. As Rick sees it, this is a unique opportunity to acquire shares of companies that are undervalued, and many of these stocks are becoming more attractive as the market corrects. Rick also noted that he's having difficulty finding affordable stocks to buy, as many of the larger, senior companies still seem overpriced. However, he mentioned that the junior companies he specializes in have become relatively more affordable, with share price decreases resolving some of these pricing issues. For years, the junior sector has been under pressure from unfavorable private placement terms, but this is starting to change. As the market turns, it's likely that more opportunities will arise for those willing to take a chance on these undervalued stocks. Another issue Rick highlighted is that for many years, the world has been relatively benign. The world hasn't experienced much armed conflict in recent decades, and as a result, many big thinkers believed that we could rely on butterfly-friendly sources of power like solar and wind. However, Rick points to some major mistakes that have been made. For example, Germany's decision to rely heavily on solar power, even though the country is located in a region with limited sunlight, was a strategic blunder. This reliance has led to difficulties, especially at night when there is no sunlight, causing significant energy shortages. Additionally, the decision to phase out nuclear power following the Fukushima disaster has had unforeseen consequences. As a result, Germany has had to rely more heavily on burning sulfur-laden lignite coal, which is counterproductive to their green energy goals. Rick also pointed out that relying on Russian oil and gas, particularly in Europe, was a major mistake. In retrospect, this was a strategic error that has led to higher energy costs and supply chain issues. Rick believes that governments worldwide have made some of these errors. As a result, the value of existing energy reserves has increased. Governments like the U.S. are making contradictory statements, such as asking oil companies to invest more while also restricting their access to drilling locations and warning that these assets might become stranded. For example, Rick highlighted how President Biden has suggested to oil companies that they should invest more in the industry, while simultaneously warning that the oil sector is a dying business. Rick believes that this kind of contradictory messaging has created a complicated environment for oil companies. Biden's frustration with high gasoline prices combined with the lack of investment in new drilling has created a challenging situation. Rick expressed his amazement that the president can argue that oil companies are gouging consumers when, in reality, the price of gasoline contains only a small fraction of profit for the oil companies and a large portion of taxes. Rick concluded his speech by stating that he could go on, but he believes his point has been made clear. The market is beginning to turn, and investors should be prepared for the changes coming in the natural resource sector. So what do you think? Do you agree with Rick's views, or do you think he's off the mark? Leave your thoughts in the comments below. If you found this video helpful, don't forget to hit the like and subscribe buttons. And if you're new to the channel, click the notification bell to stay updated. Thank you for watching, and we'll see you in our next video.